Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
The next that we're going to look at are cash flow strategies. So essentially taking a neutral to an expectation of a moderate move on the particular pair value, and then going in and looking to sell calls or puts or selling the option short to ultimately take advantage of generating or collecting a premium with the expectation that option contract is going to expire worthless. So we're going to look at creating that approach, and then mitigating some of the risk in selling these options by creating credit spreads such as a bear call spread or a bull put spread, and then taking it one step further and looking at establishing an iron condor, which is ultimately a combination of two credit spreads. And then finally, we're looking at creating more or less a non-biased position where we're expecting either a move up or down. So in other words, we're expecting volatility, we're expecting movement in these within the pair value. We just don't know which way it's going to go, and so ultimately we want to be able to capitalize either up or down. So we'll look at creating either a straddle or a strangle on a particular pair value as well. So we got lots of information to cover this evening, and so I'm going to try to highlight these different strategies using some relevant examples, and of course as we move forward, happy to answer the questions and such that anybody may have. Now, number of considerations that need to be addressed first off before anybody actually attempts to trade any of these strategies. First of all, you really need to look at what your objectives are in terms of managing your own account and your own portfolio. This really applies regardless of whether you're looking at using FX options or index options or or equity options. The bottom line is you need to really step back and establish what you're trying to accomplish with respect to a particular security before you implement any strategy. And then the second and probably equally important is just what your experience is with respect to trading and managing these specific strategies. I'm going to highlight some strategies tonight that may be quite foreign to some individuals, and while there are a lot of reasons why we would look to implement specific strategies under certain conditions, what should supersede the desire to click the buttons is whether or not you fully understand that strategy. So we really have a very short period of time to sort of delve into the ins and outs of any one of these strategies. So I just want to encourage folks online here where this is your first sort of exposure to some of these option combinations to really, if you find that you're interested and want to look to implement these strategies, really take the time to look a little further into just the different components and how they should be managed. So we're going to range essentially from the most simple to some somewhat complex, and again, just you're going to choose your approach to trading, your views based on your experience as well as what you're trying to accomplish. Now, the second is margin requirement, and generally when we're just creating a strategy whereby we're an option buyer, so in other words, we're looking to buy a call, we're looking to buy a put, or we're looking to create what's referred to as a debit spread. We're paying out a certain amount to create these strategies. So there really is no margin requirement on our end. We're paying a certain amount. That amount comes out of our account, and that's really it. And that's the maximum that we can in fact lose. But on some of these more advanced strategies, such as the credit spreads that we're going to look at tonight, or some of the naked rights, we have to understand that because we're taking on positions with obligations, that our brokers are going to require us to put up a certain amount of capital, and that also has to come into consideration, because your account size is also going to dictate what type of strategies you're going to be able to use use as well. Finally, of course, what your directional bias is. Ultimately, when we're looking at we're looking at implementing any option strategy, our directional bias is essentially established by what we're seeing within a particular price chart, and so from that price chart, we're going to be able to generate a particular directional bias, and then we're going to be able to establish a specific time frame under which we feel that the move is going to take place, and also target. So we very much encourage individuals looking to use these various strategies to become much more comfortable and confident with technical analysis and with analyzing price charts to establish entry levels, targets, support and resistance levels, that sort of thing. And of course, that's a topic for another webinar. But at the end of the day, we're going to combine our technical analysis with the strategy selection, and together use those two tools to create a strategy and manage the strategy more appropriately. First the thing that I want to look at, or first trading approach that I want to look at, is really creating a directional bias. And I'm not going to spend a lot of time on just a simple call option or put option, because I'm going to assume that most people are already very comfortable with the idea of buying a call option if we anticipate the pair value going up, or the U.S. dollar going up against a specific currency. Of course, buying a put option if we expect the U.S. dollar to go down against a specific currency. At the end of the day, we really have to make sure that we've established a specific directional bias, because ultimately, if the underlying pair value doesn't do anything, we understand that as the option buyer, we run the risk of losing the entire premium. So we really need to see movement in the particular pair value in order for our trade to be profitable. Now, again, just as I suggested, we're going to use price charts to establish an appropriate entry, and as well as exit strategy, as well as as specific targets. And the one thing that I always try to reinforce, and it doesn't matter whether we're looking at equity or index or currency options, is the importance of understanding the limited time frame during which we have to participate. So so even though we have a limited risk exposure based on the amount of the amount that we're paying for any particular option contract, we have to understand that if a move does not take place within our specific time frame, we run the risk of losing that premium. And so the reason why we used our price charts very closely, or the reason why we track the price action or the pair value action very closely, is that the charts will give us specific keys as to when we should be looking at locking in profits, so that we're not just sitting back and letting each day pass, and again running the risk of getting close to expiration and losing our premium. Now, that being said, once again, we need to establish an appropriate expiration date for us to participate with. So, general rule of thumb that we consider when we're looking to establish a trade with a directional bias, and again, this goes with stocks, indices, currency options, what have you, is that we don't want to we want to make sure that we select at least 3 months for a move to take place. Now, that doesn't necessarily mean that we're holding the position for the entire 3 months, because remember that with these FX options, as with any option contract, we can if we buy it, we can for a certain time frame, we can sell it at any point within that time frame to lock in profits or to cut our losses. So even though we've given ourselves 3 months to participate, if we're profitable within a certain couple of days, we're going to be managing for those profits.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.